Welcome to Stock Market Reddit Daily, a YouTube channel dedicated to covering the latest discussion about the stock market within the social media platform Reddit. For today's video, we look further into the valuation of RDDT. Is it in deep value territory or a value trap? Let's see. So you know how it is when a big stock like Reddit's hits the market? It's just a storm of noise, opinions, and of course, memes everywhere. Well, one user on the value investing subreddit decided to try and cut through all of that. They posted a really deep dive, trying to find the fair value of the stock using some serious math. All right, so here's the game plan. First, we're going to look at the model itself, and then we're going to break down the key assumptions that make it tick. After that, we'll dive into how the Reddit community put it to the test, cover the risks that the model doesn't account for, and finally, try to figure out what this all really means. The goal here was pretty straightforward, but man, it was a big swing. They wanted to build a valuation model by projecting Reddit's financials all the way out to the year 2030. The idea was to get away from all the hype and emotion and just ground the conversation in cold, hard numbers. So after all of that number crunching, the whole analysis really boils down to 4 different possible futures for Reddit stock, and each one is built on a totally different set of ideas about how much the company is going to grow. And here it is, the headline number, the one that got everyone talking, just under $184 a share. This is the reasonable case, the central argument of the whole post. But, and this is a really big but, it's just one piece of a much bigger puzzle. Now check out the range on this. This is what's so wild. We go from a bear case of $96 all the way up to an ultra bull case of over $600. This massive spread just goes to show you how sensitive these models are. You just tweak a few of the underlying assumptions and you get a completely different story. Right, so that leaves us to the most important question. What's actually powering this thing? What are the key levers being pulled behind the scenes? Well, it really all boils down to 3 core assumptions that the poster made about Reddit's future. First up, and this is probably the biggest one, is ARPU. That's average revenue per user. The logic here is pretty simple. It seems unlikely that Reddit will ever be better at making money from its users than a giant like Meta. So Meta's ARPU is basically set as the absolute ceiling, the best it could ever possibly get. And this chart just lays it all out perfectly. That $183 reasonable case, that's banking on the idea that by 2030, Reddit can make about 1/3 of the money per user that Meta is projected to make in 2025. That Ultra Bowl case we saw, that assumes Reddit somehow manages to match Meta's performance completely. That's a huge bet. The second key assumption is about user growth, or maybe a lack of it. This one's a bit of a shocker. The model assumes 0 new daily active users. Yep, you heard that right. The argument is that in the super important US market, growth is already hitting a wall. So they just froze the user count, kept it completely flat in every single scenario from the worst case to the best. And finally, there's the price-to-earnings ratio. This is just a fancy way of figuring out how much the market should be willing to pay for the company based on its growth. In the reasonable case, the model predicts about 18% growth per year, which earns it a PE multiple of 23. If you believe in faster growth, you justify a higher multiple. Okay, so as you can imagine, the moment this analysis went up, the value investing community jumped all over it. They immediately started picking apart these assumptions and putting the whole thing to the test. The first big critique, coming from user Epic2504, was all about those static user numbers. They basically said, hey, by keeping the user count flat, you're taking one of the biggest drivers of both risk and reward completely off the table. It kind of makes the different scenarios feel way less meaningful. And they didn't stop there. They also called out the whole Meta comparison. I mean, is Reddit really anything like Meta? They have fundamentally different ad technologies, different user behaviors, the whole 9 yards. So just saying Reddit's future is a simple percentage of Meta's felt, in their own words, arbitrary. Finally, they got into the real nitty-gritty of the math. They flagged the 8% discount rate. Now, that number is used to calculate what future cash flows are worth today, and 8% is, well, it's pretty low for a growth stage tech company. A higher rate would reflect more risk. Using a low rate like that can make the stock's current value seem a lot higher than it might actually be. Now, to be fair, the original poster was totally upfront that this model was simplified. They even listed out a bunch of key factors, both potential upsides and downsides, that could completely change the final numbers. So on the bright side, the model could be way too conservative. What if the whole online ad market just keeps exploding? Or what if Reddit finally cracks the code on converting all those millions of casual visitors into loyal, logged-in daily users? If any of that happens, the revenue picture could look a lot rosier. But there are some pretty big risks on the other side too. You've got high stock-based compensation, which can dilute the value for shareholders. There's the fact that Reddit is mostly an English-language platform, limiting its global reach. And then there's the elephant in the room. What if its ad technology just never improves as much as everyone hopes? So, after all that, what's the big takeaway here? It seems like it's less about whether that specific price of $183 is right or wrong. The really crucial point is that any valuation, no matter how packed it is with numbers and spreadsheets, is actually just a story. The assumptions are the plot points, the logic is the narrative, and that final price target, that's just the end of the story.
So understanding those assumptions, whether you think Reddit can monetize like Meta, whether its user base can still grow, how risky it all is, that's way more important than just memorizing a number. And it leaves us with the real question you have to consider. Which version of Reddit's future, which one of these stories do you actually believe?